Welcome at this new interview at Room for Discussion. Since the financial crisis in 2008, the financial sector has been much under scrutiny, which revealed its problems and its unsustainability. We will analyze the purpose of the financial sector and its importance for the working of our economy. Today we will discuss how the financial sector works, how it failed, and especially how we can solve the problems. So we have two very interesting guests today. Mr. Herman Wijffels, who worked at the Rabobank for 18 years. He's a Dutch economist. He's also been part of the Socio-Economical Council of the Netherlands. And until a couple of months ago, he taught at the University of Utrecht, where he was one of the founders of the Sustainable Finance Lab. Our second guest, Mr. David Pitt-Watson, flew in directly from London, especially for this interview at Room for Discussion. He teaches at a London business school his own master course, Purpose of Finance. Until the end of 2012, he's been chair of the Hermes Focus Funds, which promote good management. He's also been economical advisor of Tony Blair, and he's also co-author of the book What They Do With Your Money, which discusses the problems of the financial sector, what is its purpose, and the possible solutions. During the interview, you will have the chance to ask questions at the microphone at Kari, or if you're following the live stream, use via Twitter the hashtag RFD. Now give a warm round of applause for our guests here today. Welcome.
Hello, how are you?
Welcome.
Oh, thank you.
Welcome.
Nice to see you.
Welcome.
Hi.
Welcome, gentlemen, on my behalf as well. I'm very glad that Mr. Pitt-Watson, you've come all the way from London to Amsterdam to attend this interview.
Are much better designed to fulfill their purpose than you would find in other parts of the world. So, for example, in the UK today, if you work in the private sector, it's almost impossible for you to save in a way that can give you a predictable pension when you retire that will last until the day that you die. We've almost abandoned that system. You still have that in the Netherlands. It's very precious. So I like to come to the Netherlands because usually I have a little bit more of a smile on my face when I leave the Netherlands than if I visit Wall Street.
Interesting. Mr. Wijffels, you are one of the founders of the Sustainable Finance Lab. What was the reason for you to set up such a platform?
Well, back in 2009, when I joined Utrecht University as a professor of sustainability, we had this financial crisis, and what I witnessed was that economists from academia were just shouting across the ditch to the financial sector, and vice versa, and that there was no real dialogue between academia and the financial sector. So I figured, this is useless, and why not create a platform for people from different Dutch universities and try to get a, let's say, fruitful dialogue between academia and the financial sector.
Is it working so far?
It has been quite useful in my view. We have now extended it also to another platform, kind of a spin-off of the Sustainable Finance Lab with the pension industry. And that also works quite well. So we are now in a constructive, positive dialogue between academia and the financial sector.
So you worked at the Rabobank, which is one of the biggest financial institutions of the Netherlands, for about 18 when you were there, who did you feel responsible for? The savers, lenders, or for profit maximization?
The foundations of that institutions are to serve the real economy and to serve, in the first instance, businesses, small businesses, farmers and other SMEs, and also those people who are entrusting funds to the bank, so that always has to be an equilibrium between those two interests. And profits, in the time I was at Rabobank, and that was in the last century, I left the bank 18 years ago in 1999, we managed the bank in such a way that we made a profit that was able to increase the equity base of the bank in line with the growth of the balance sheet of the bank. So that was the way we did it. And if we were able to make more profit than we needed to keep up the equity base relatively, we just were turning the knocks of the interest rates.
So the foundations have changed a little bit. So it's not really to sustain the real economy anymore.
It's difficult for me to comment on what happened after I left. I'm not. What?
Why did you leave?
Well, I had been there for 18 years. I joined the bank in '82, and I had been CEO for 13 years, and that was enough. So that really was enough. So I pursued other interests, and I became the chair of the Social and Economic Council of the country. But I think the foundations are still there. So the present CEO is really running the institution again, as we did in the last century, in terms of this is an institution designed for and with the purpose of to serve the real economy and the real interest of people in this country and internationally, where we are also active.
So, Mr. Pitt-Watson, you directed the Hermes Focus Funds for several years. And in their profile, they state, we have responsibilities which go beyond those defined in any contract towards our clients and society at large. What is meant by these larger responsibilities?
So, most of the money that is out there in financial markets, the stuff that you see that's creating all those screens that go green and go red, it's our money. It's savings that's been put aside by people of comparatively modest wealth into their pensions or into their savings. So if you manage that money only with a view to how do I manage to get the greatest short-term profit out of that, you're managing it in a way that might not be in the interests of the people whose money it is. It's our money. That's what the title of the book, what they do with your money. It's our money. So what we were trying to do at Hermes, we were owned by a pension fund. Yeah, a bit like APG would be owned by ABP in Holland here. We were owned by a pension fund. And when we were making our decisions, we were trying to say, if we took as a whole the hundreds of thousands of people whose money it is that we're managing, what would they like us to do? How would they like to see it invested? And more particularly, we have powers over the boards of directors of companies. How would they like to see those boards of directors act? And that was what we were doing that was a little bit different.
And this social responsibility, where does it come from? From law or morality?
So, it's somewhere in between, isn't it? And I think one of the things that we do when we think about economics is that all we talk about is law and numbers. And we forget that there are, I'm going to call it cultures, not morality, because morality sounds like I'm trying to be a good person or a bad person. There are huge social influences that allow finance to work properly. They're sometimes written down in law, and the law is usually something called fiduciary duty, to act in good faith on behalf of the person whose money you're looking after. So I wouldn't say, is it morality or is it law? I'd simply say, if you want to think about how you get financial institutions to work well, you cannot divorce them from the society and the culture on which they are built.
But
and if you do that, it's really dangerous. 2008 would suggest to me it's really, really dangerous.
But is this something really particular to the Hermes focus funds, or do we see that, is that wide practice within the financial sector?
I think we were explicit that that was what we were trying to do. I think everybody does it to an extent, because if they didn't do it to an extent, we would have chaos.
Yes.
Yeah?
Which we don't have.
We don't quite have. No. At 2008, we came pretty damn close to chaos. But look, if every person in finance took the opportunity that they did to enrich themselves at the expense of the people whose money they are managing, we would have chaos. The whole financial system would collapse. I think just at Hermes, we were a little bit more explicit than most in saying that this is what we should try and do. And that the social responsibility comes with that, as well as, by the way, the financial responsibility.
Yes,
they're not
clear.
separate.
Let's now move on to the problems of the current financial sector, and also what has changed since the financial crisis in 2008. Mr. Wijffels, in 2008, the banks were described as black boxes. There was this huge lack of transparency. Have we seen that the system has become more simplified and transparent since then?
You know, my view is that here in the Netherlands, indeed, that happened. When you look at, for example, total assets of banks, they are on the decrease since the financial crisis. Most Dutch banks, all Dutch banks, I would say, have really cut in their trading activities and have moved more into, let's say, activities linked to the real economy. So my view of the Dutch sector is that it has really improved in that sense. I would not say that generally about the global system.
Mm-hmm. Do you agree, Mr. Pitt-Watson?
Yeah, I think I don't know a lot about Holland, but I don't think that we've had a fundamental rethink.
Okay.
The fundamental rethink that we need.
Oh, that, I agree.
And I think actually I'd be concerned about that, because running up to 2008, most economists would say we've got a very safe system here. There are checks and balances and the mathematics all work. It's like your plane was showing that its altimeter was at 30,000 feet or at 10,000 meters, and you flew across the Alps and you went straight into a hill. You were wrong. The way we were doing economics and finance was wrong. My worry would be that we're still using those same techniques to think about how we control the finance industry, except that instead of flying at 10,000 meters, we're flying at 15,000 meters. The problem is the altimeter doesn't work.
Okay.
No, I would say that after the financial crisis, we have kind of concentrated on revamping the old system.
That's right.
And we have not really deeply thought through what kind of fundamental changes are needed going forward.
So it was just incremental changes
Yeah.
within the existing
Yeah. So
system.
and what happened, in fact, that is there has been much more regulation. Yeah. So today it's a heavily regulated sector, but in the basis of it, there is still really issues that have not been solved.
Yeah, like speculation and excessive risk-taking are still common practice within the sector. Why has regulation not really had an effect on this?
Well, I've been a member of the so-called Liikanen committee. That was a commission instituted by the European Union to advise about the future of the financial sector. Mm-hmm. And one of the advice elements in our report was to separate trading from, let's say, bread and butter banking. And that has not been followed up by the politicians. So that was one of the key elements to really separate the part of the banking system that was, far away from the real economy, from the part of the banks that was really serving the real economy. But for example, the French and the German politicians didn't want to follow up that part of advice, so it's still too much intertwined.
So only 15% of the money that flows inside the financial sector goes to the real economy.
Yeah.
Why is so much money trapped inside the financial sector?
Well, maybe kind of surprising answer is, but one of the reasons is that after 150 years of industrial economy, we have become rich. And there is lots and lots of wealth floating around. And at this point in time, this huge stock of wealth is looking for, let's say, profit and for making money with money. And that happens at a point in time, and we might discuss that later on in our debate, when we really need a complete revamp of our economy in terms of making it fit for the 21st century, in terms of fitting into the circumstances of the 21st century, which is creating an economy that is able, to thrive within the limits of the ecological limits of the planet.
Yeah.
And this
we'll tackle this issue in a bit, but what you just said, doesn't this mean that there's a huge bubble again within the financial sector, which is not serving the real economy at all?
Yes.
Isn't that
There
a
is
problem?
a huge amount. So, look, the amount of trades that we have in foreign exchange are 100 times the level of foreign trade. Now, foreign exchange is pretty important. Yeah, if you want to buy and sell from the UK to Holland, you need to change pounds and euros. You would have thought that it might be equivalent, or maybe a little bit more than foreign trade. It's 100 times that.
How is that
because
possible?
people have been persuaded that there is a way of being able to make money by trading euros and pounds and dollars and every other exchange, and that you can just make a profit out of doing that. Maybe it could be twice, maybe it could be 3 times, but 100 times, it's simply impossible.
So there's no basis. So there's no basis for this wealth.
The worry is that it's a zero-sum game, a costly zero-sum game, but it's done with our money. So these people, it's not their foreign exchange that they're trading, it's our foreign exchange that's coming from our pension funds or companies that we own through our pension funds.
Why is there such a lack of long-term vision? Because there's an opportunity to make profit?
Because if it's multifaceted, but if we keep measuring people that way, if we keep allowing markets to work and then regulate and regulate and regulate, if we don't design the system so that it's going to fulfill its purpose in the first place, that's what happens. You will go down an evolutionary path where markets will serve the people that are working within it, and people within finance, they're not bad people. They have incentives. They want to make money like everybody else.
Yeah, but you know, here is a very deep going issue what we have to discuss about, in fact, culture, or about the relationship between business in general and society. Mm-hmm. And you know, as I have studied economics a long time ago, you know, I have learned that the system of private enterprise, including finance, has been created by linking personal or individual interest with societal interest in a very smart way. But ultimately, the system has been developed and designed in such a way that private interest serves societal interest.
Yes.
And what happened over time is that profit has become a goal, and it originally was a means. So, in fact, the purpose or the goal and the means have been turned upside down. That's really what happened in our economic and societal system. And that's where we went wrong. And you know, if that is, and that especially happened in the Anglo-Saxon world, and let's say the morality of Wall Street has become dominant, and the morality of Wall Street is, it is all about making a profit, and what is the effect on society is not of our business.
But often
and
it's
that's
not
where
even
we went completely wrong.
But often it's not even possible to see what is going on in the real economy due to these financial speculations or financial profit maximizations. How is it possible?
Do you know, I sort of agree with that, Herman, but if I could just defend the Anglo-Saxon system a little bit, if I was looking at the banks of the developed world today, and I was thinking about where do we have problems, I think it would be in Germany and Italy, where people have buried the problems of the stability of the banks, and this is coming back to haunt. And so this isn't, I don't think it's just profit and societal, it's, as you're saying, it's marrying the two, so that when people act in the way that they feel is in their best interests, they also do the right thing. And it's particularly acute in finance, but you can see it in other trades as well. In finance, the thing is that financier knows more about what they're selling you than you do. The same would happen in medicine, but you trust that your doctor will never tell you you've got a disease that you don't have in order to treat you, make you better for something. That we just know that doctors won't do that. Actually, 200 years ago, people didn't know that, and there's lots of good stories about that finance could learn from. The problem, I think, is in finance that we've built institutions where we have legitimized that it's okay for me to slightly cheat you. And then I do business with Herman, and it's okay for him to slightly cheat me. And then the next person. And you've gone through all the agents, and by the time you reach the end of that, everybody has creamed off a little bit of your saving.
But this presupposes that the financial sector knows what they're actually doing with our money, but often this is not even the case, is it?
So I don't think in any of those cheats usually that there is somebody who is really very bad. But if you've got one agent after another agent after another agent, all with that self-serving ideal, in, let's be clear, an industry that has not been designed to fulfill its purpose, but has allowed anyone to intervene at any point where they say that they can do something that's okay, you will end up with the system.
And that's also where remuneration systems come in.
Yeah, indeed,
because
absolutely.
That's what also went completely wrong. That say trading profits were shared with the traders, So that really pushed a major part of the sector, especially the investment banks, into that sector. And then trading is by definition short term.
Yeah.
Yeah.
So also in auditing, we have designed a system that is called fair value accounting. That's also short term.
Absolutely.
Every asset has to be translated to the present value, and that has pulled the whole system from long-term orientation in some cases to completely short-term orientation. And that's also a problem for pension funds, because they have long-term liabilities and they trade in a short-term oriented system. Right?
Yeah.
So the allocation of capital is also a problem. It's also oriented to, with the benchmarks also, to the very short term.
And the audit framework is a really good example of where we use theory rather than thinking about purpose. You know, the original purpose of the audit was to make sure that people managed companies well, because they had to declare how they'd managed them, and they would show what the figures were. About 10, 20 years ago, we moved auditing standards so that there were ones that were called decision useful, and they were all marked to market, as Herman said, so that traders would know just exactly on that day how much your balance sheet was worth. That wasn't what an audit was for. It was there to make sure that the system worked in the first place.
Yeah.
Now, it'll take us a long time to get our audit back to where it was before, but that's the sort of thing we should be doing.
Yeah.
So this short-term vision, what does this mean for the ecological and social sustainable investments? Doesn't it block it? Doesn't it destroy this vision of long-term?
Absolutely. And so, you know, my view of where we are, in fact, as mankind at this point in time, that is in a situation in which the way our life and our societies operate, we are not fitting with 7.25 billion people on this one planet. We are really gradually undermining and destroying the very basis of life. And that's a huge challenge we have to face, all of us, collectively and individually, in the 21st century. And what is needed, that is a huge overhaul of the way we operate our economy and the way we live. So we have to invest in circular economy, for example, which is a huge change. We have to invest in renewable energy systems. We have to completely design an economy that is really able to, let's say, be sustainable in these circumstances.
Yeah,
so we need long-term investment, and the present way of operating of financial markets is not designed and oriented towards doing that.
Yeah.
That's a real problem.
Before going to see how that could work and to possible solutions, is there any audience question on the problem of the financial sector? No? Then we'll go on to how to push the financial sector into the right direction. To do so, we first have to define the purpose. You already mentioned it a bit. Could you redefine what is the actual purpose of the financial sector?
Well, I think there's 4 things it needs to do. It needs to keep our money safe when we put it in banks. It needs to help us transact with one another. It needs to allow us to share risk. And the most critical thing is it needs to take our savings and be able to give it to people who've got good use for those savings. If you come though, I'm going to be a little bit more optimistic than Herman on the sustainability front. It's a sort of balanced optimism. I was involved in the run-up to the negotiations they had in Paris for the climate change negotiations. And actually, surprisingly, the big financial institutions signed a petition for that conference telling the policymakers, please do a tough deal. Because if you do a tough deal, that allows us to act in the way that we ought to be
And
acting for our beneficiaries.
Were all financial institutions involved in this?
Yeah, the Dutch financial institutions you should be quite proud of. The Dutch financial institutions, the pension funds in particular, have been in the vanguard of that, as have some of the Californian, Canadian pension funds. But $26 trillion signed up to that. 26 trillion is a big number for the pension fund. So despite all the things that Herman says, and he's right to say them about short-termism, there are some good things that are going on. The thing, though, that we've got to get right is finance doesn't exist in a vacuum. It exists as part of this larger framework of law, and it exists in this larger framework of culture that we've been talking about. So if we're going to move this forward, we all need to be, as we would say, singing from the same hymn sheet. We need financial institutions that are based on some clear sense of what their purpose ought to be.
Yeah.
We need to be challenging those that are not and supporting those that are.
Mr. Wijffels, do you agree?
Yes, I do agree in the sense that, let's say, the openness of many financial institutions to the necessity of moving into a sustainable direction has increased. And you know, personally, I have invested quite a lot of my time in advocating that. But when you look at the way the financial markets are operating at this point in time, and the way, for example, pension funds are run, there is still lots of problems. Let me, for example, mention a couple of them. One is that in many heads of people managing financial institutions, it is still clear that going for sustainability investment is creating, let's say, concessions in terms of returns. Many people still believe that you have lower returns in sustainability investment. It's not true. You know, in that sustainable pension investment lab, we have just this week made a publication that will be probably available in 2 weeks, where we have done a study of all the academia work that has been done on this particular issue. And it's very clear that in many cases, returns are as high as, let's say, generally, at least the same one.
Yeah.
So that's one.
Would you then say that the risks are higher for these investments?
And then second is that when you look at, let's say, what is ahead, it has become very clear from all the work that has been done in academia that corporations really taking care of sustainability issues are by far better managed than corporations not interested at all in sustainability issues.
And they give you a bigger return.
Yeah, and
actually that's one of the, another bit of good news is that companies that think about these things, companies that don't think about short-term profits make more long-term profits. It's maybe a bit obvious that, but it means that for us as shareholders, that promoting companies that are thinking about that, not that are ignoring profits, but are thinking about how they fulfill their purpose, is more likely to do as well in the long term. And that's what the evidence says quite strongly.
So what is the role of the government policies for these sustainable investments, ecological investments?
Well, you know, first of all, and that's a key issue in all of this, energy is the central element in moving towards a more sustainable economy. And what we see there today is that there is a kind of end of the market situation. Many countries with huge fossil fuel stocks, you know, they want to make sure that they sell it. So that's why the oil prices have come down so much. And this is an ideal point of time to introduce a carbon tax. So in my view, to make a success out of the Paris Agreement, we will have to move globally, and maybe first of all in Europe, I hope so, to introducing a considerable carbon tax, possibly of at least $50 per ton of carbon. And that's a key element in what has to happen. And then secondly, you know, I have been here in this country advocating creating a national investment bank. In the same way we had that after the Second World War in the phase of industrialization of the Netherlands, in order to create, let's say, a kind of a premier risk situation in which a government institution is providing equity, on which the banks and other financial institutions like pension funds can co-invest in, let's say, the circular economy and new energy systems and so on. So that's the two elements I would advocate going forward.
Yeah, and actually on the first one, I mean, any of you that study economics will know that if there is a silver bullet on global warming, it would be to put a tax on carbon. And that's what the big investors were asking for in Paris. They didn't get it, but that was what the big investors were asking for. I think as well, though, you could go through the whole system and think about the way that it's designed. I was talking to one of the Dutch regulators yesterday who was saying, you know, there's been real progress amongst the pension funds, partly because of some of the work you've been doing, Herman, and that they've been quite influential in getting more investment from the Dutch pension funds into green investment. I think that's terrific. We've made some progress in Britain, but we're swimming against the tide. And here's the tide. It's another thing that you'll learn in economics, which is that if you want to keep a system honest, you need to have competition. Mm-hmm. So if you want the pension system to be honest, the reasoning goes, people need to be able to switch their pension provider. Yeah? So we've put in all sorts of systems to allow people to switch their pension provider. But if you're going to switch your pension provider, you need to know exactly how much your pension is worth, don't you? Mm-hmm. So if you decide that you're going to invest in a solar farm, that doesn't give you a price because you don't know for 50 years how much money you're going to have got from the solar farm. So we don't want our pension funds investing in that because it stops competition. And that's the logic that we've got into and that America's got into and many other countries got into in terms of the way they regulate. They haven't thought about the question in the first place, what do we want pension funds to be doing, which is in the long term to be giving us good returns.
Yeah, and wouldn't this be the same for also carbon investments? Like you don't know what the value will be in the long term.
Absolutely right. And also, if you think you can trade out of any problem, then I can buy a coal-fired power station just providing that I'm a nanosecond earlier in discovering that that's a catastrophe than you were. Mm-hmm. I'll have sold it to you and I'll run away from that problem. That's a really unhelpful way to be thinking about what it is that they do with our money.
Now we're again addressing the problem of short-term vision. In your book you address there's possible solutions to this short-term vision and to ensure a long-term vision. How can we do that?
The first thing is ask about purpose. If someone had asked about the purpose of audit and accounting 20 years ago, Herman, yeah? It would have made a difference to the financial crisis,
absolutely.
wouldn't it? Yeah?
Absolutely.
If somebody asked about the purpose of a bank, I think you'd discover that more than 15% of their lending was to the real world, because that's the purpose of a bank. Mm-hmm. If somebody thought about the purpose of a pension fund, they would have designed a system that was broadly like you have in Holland, hopefully a little bit better, but would be a completely radical and wonderful innovation in a country like the United States or the United Kingdom. So it would be to start with purpose. And who must make that demand? It's our money. We need to make that demand because the people within the system won't do it unless there's pressure.
You also argue for company bosses to be paid in cash, not in huge bonuses related to
if you put
performance.
If you put incentives through the system that encourage people to be short term, you know what? They'll be short term. Mm-hmm. You don't need a degree of economics to work that out.
Yeah. And what are the incentives at the moment?
And the incentives at the moment are quite short term. Also, the incentives are hugely thought about in terms of that, of the incentive being what you need to get someone to do their job properly. I mean, if you'd had a huge incentive that was going to be 4 times your base salary when you were running Rabobank, would you have run it any better?
No,
Yeah.
not at all.
No. In fact, possibly you would have run it worse because you would have said, God, if I can manage to get that share.
Yeah.
So what we've done is we put incentives that are huge right the way through the financial system, rather than trying to build trust into it in the first place. Now, you need to be cautious about trust. This is not a case where the incentive-based systems in the Anglo-Saxon world are terrible and the ones in Europe. You need to get trust into the system. You need challenge in the governance systems. You need all of those sorts of things. But what you don't want is the system we've got right now. It's very inefficient.
Mr. Wijffels, there's also another possibility, which is the clawback system, in order to ensure such a long-term vision. Could you quickly explain this system?
Well, the basic idea behind that, as far as I know, is that when you have had, let's say, remunerations of whatever kind, for results in the past, that when after some years, maybe 3-4 years, it turns out that you have really made the wrong decisions and be a disaster for the institution, that the bonuses you have received have to be given back. That's a system. But you know, talking about trust, ultimately, trust goes back to integrity. And that is a key element in what we have to bring into the design of our systems. And I would say the audit profession, the audit industry, has a major role to play in that. We are now talking about integrated reporting. So not only reporting about profits and about, let's say, financials, but also reporting about the social contribution of corporations and the ecological contribution of corporations. And by doing that, we get a wider universe of where the societal value in the long term is coming from. And there, the audit industry will really have to move to a next level of providing proof of integrity in the way corporations are run
So
and
is
the
the
way
system-
financial institutions are operating.
So is the system working according to you?
I have quite some expectations of moving from the present purely financial reporting to an integrated reporting system, because that will provide society and provide also, let's say, pension funds, for example, who are providing the capital, with more information about long-term security of the investments.
And the interesting thing is there as well, that the countries that are making the biggest advance in integrated reporting are not Holland and France and Britain and Japan. They're South Africa and Brazil. That actually some of the challenges that we're seeing coming in finance, which I find really interesting, they're coming from the south now. And we need to be looking out for this in the north as well, because we'll be left behind.
So, Mr. Wijffels, since you were one of the founders of the Sustainable Finance Lab, how do we actually measure the ecological sustainability within finance? Is there a way to measure that?
Well, you know, in generally speaking, financial institutions do not have a large eco-footprint of their own operation. So it's through their investments and their, let's say, activities in society that they really have an impact on ecological footprint. What is now happening in some cases, and some of the institutions in the Netherlands are already doing that, that is looking, for example, at the carbon intensity of investment portfolios. And when you look into that, you can see whether you are, let's say, moving into the right direction or into the wrong direction. For example, the European Central Bank, by buying bonds, also of corporations, is investing a lot into the fossil industry. 25% of the corporate bonds on the balance sheet of the European Central Bank are in oil and gas and coal companies. So they are moving into the right direction, in the wrong direction. So we really have to integrate different elements of, let's say, the serving society into the way we judge what a financial institution is creating as value for society.
Is divesting also a solution to this?
Of course. Quite some foundations are doing that. A notorious example is the Rockefeller Foundation, where they decided a couple of years ago already to go out of the fossil fuel industry and move into renewables. So that is giving an important signal. At the University of Utrecht, we had an effort to move the bank of the university to a bank that was really caring about sustainability. So I don't know what the UvA is doing at this point.
But disinvestment isn't the only thing that you can do or the only thing that you should do. And there are some big investors. The Swedish National Pension Fund, AP4, has done a big portfolio decarbonisation as a thing the United Nations is sponsoring to try and do that. But if you just do that, you might end up where the tobacco industry has ended up, which is all the good guys are not invested in tobacco, but tobacco is still being produced and marketed around the world. That actually we need to use our power as investors to say to ExxonMobil, I'm sorry, mate, you need to show us in the great report.
So we actually need to be a part of the company and from within try to change their practices.
Absolutely right. You need to be doing that as well. You need to be thinking as a financial institution, the degree to which at board level you're asking questions about the portfolio of things that you're doing, the pressure that you're putting on the rest of the system.
And there's engagement coming into play. Engagement of investors into the policies of corporations is also a key ingredient of moving into the right direction.
I think that's right, Herman. And I think as well, even if you're Goldman Sachs trading corporate bonds, only holding on to them for a morning or for a nanosecond, you need to have thought this through. If we're going to solve the environmental issue, it is going to change everything that we do everywhere, hugely in finance. And so there isn't one silver bullet. But if I was a student at a university, though, I would want to know that my endowment knew how much carbon was coming from the investments from that, and that had a plan for thinking about how they were going to bring it down. The best one would be to bring it down by getting companies to change rather than to getting out of the bad companies.
Talking about that, Mr. Wijffels, you before mentioned, I think, the Triodos Bank, right, which is connected to the University of Utrecht. There's another bank in Germany, the GLS Bank, which are merely investing in socially and ethically sustainable projects. Is this really something we see more and more?
So then you're talking about so-called impact investment, and that's a growing universe. It's not, compared to the whole market, a real big thing, but it is getting, let's say, grown up. It's getting more mature. And it is especially effective in the area of social enterprise. In this country, at this point, we have about 6,000 social enterprises. So they are not putting profit first, but societal impact first. And impact investing also in social enterprises doing work in development cooperation, for example. That's a universe that is, in a way, setting the example of where more generally the businesses have moved to.
But is that still profitable for these banks?
Yeah, well, it's also profitable, sure. Yeah.
I mean, it is. Yeah, you mentioned Triodos. Another great Dutch institution, by the way, so we should celebrate when good stuff happens. And I was doing just about 6 months ago, actually, this workshop with a bunch of financial institutions in the room, and we were looking at exactly that question you asked Herman about what would you want to be able to see in a financial institution that was responding to the climate challenge. And we'd done this thing that sort of went from 1 to 5. And I said, you know, how many people are scoring 1, how many people are scoring 2, how many, and everyone was scoring 1 or 2, some were getting to 3, and we were thinking about what it is that they would need to do within their organization. And a little hand at the back went up and said, we scored 6 on everything. And I said, who are you? And they said, well, we're Triodos Bank. And all the other big banks said, yeah, but you don't do the real world. You don't do oil and gas and coal. And that's right. They're a successful bank and they're not doing that. And I really respect them from that. The question is, how do we get some of those techniques to work in the real world that does include oil and gas and mining and cars and all of those things that we still want, but we want them in a world that is sustainable for the future, for our children and for our grandchildren. And that we've got a long way to go on that.
Yeah, but you think this is possible?
Yeah, I mean, I you know, if somebody wants to be a really sort of squeaky clean on how their money is going to be used, you have an institution called Triodos Bank in this country that will do that for you.
Well, let me throw in here another consideration, you know. When you look at the, let's say, classical investment community, these people are still expecting returns in the area of 10% or so, 8 to 10 or maybe 12% on capital invested. And that in a period of time when money is for free. So generally interest rates are 0 nothing. That's the situation in which we are. So in fact, at this point in time, and probably also going forward, capital is, you know, for free and is abundant in a way. Capital is abundant.
Yeah.
And still today, these people expect huge returns. So we have also these people to adjust to the world that has emerged after 150 years of industrial economy with huge growth in wealth. Because the interest rates are not only low because of the policies of the central banks, but also there is huge flow of capital available.
So since the financial crisis, we have seen the emergence of alternative ways of sustainable investment, in particular relationship-based financing. Are these ways, alternative ways, could you give an example, tackling financial sector?
Yeah, so you know, it's not something that is new because originally banking was relationship banking. And maybe I can tell you a story about my discussions with rating agencies. When I was at Rabobank, we had a very low risk in our loan portfolio. Really a lot less than any bank else. That's why we have been, during my time, always a triple-E bank. Doesn't exist anymore. Triple A banks doesn't exist anymore. But these people kept asking me questions about, but you know, what kind of people do you hire for extending loans? So your risk people are really superior to everybody.